Fidelity. The entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
You said it. You finally said it.
I'm so bullish.
Andy's bullish. I'm bullish. We're bullish.
DTCC, Fidelity. The entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
You said it. You finally said it.
I'm so bullish.
Andy's bullish. I'm bullish. We're bullish. We're going to the top. We're on 4th floor today. We're going to be on floor 1, and then we're headed straight to the moon, boys.
Moon dat.
Boom. At this rate, we're going to break through 100K.
That was sarcastic, but it does feel like we're flying. Good morning. We have an incredible show. I'm stoked. Animal spirits are back, and we're talking to some people that are at the core of Neo Finance today. What better way to do it?
Man, I woke up this morning at 6:30 a.m. to a $97,000 Bitcoin, and I didn't really know what to do with myself. So I just aped more.
We had a good conversation yesterday about outperformance. I think
Pure FOMO.
I think we know animal spirits are back.
Yeah,
And
man. It's a stormy, windy day in Hawaii. It's early morning here, and yeah, just feeling good, living better, man.
yeah, 100%. It's
What? No, I was gonna say what happened this morning in the cryptoverse
into the crypt.
for you. Like, what did I miss? Catch me up here.
Well, I think quite a bit happened. Because if we look back, there's quite a bit. We're going to be talking about it today. Obviously, a fire show today, right at the core of Neo Finance. And so, obviously, what's going on in the cryptoverse today? Solana's going at their competitors. Meanwhile, Solana has more than 8 users. That's news to me. I'm excited for our guests today. We have Project 11 who raised $20 million. They're going to come on to talk about it. We're going to be going through some of the news. And then we've also got someone who I think is really, really core to Neo Finance. And I was quite skeptical of this chain and this project, but we're going to have the Figure CEO come on, and he's going to announce a new product coming from Figure. Figure is the HELOC capital market option that's available on chain. That's obviously home equity line of credit. So they've originated over $20 billion of loans on chain, and they're announcing a new product as well. So we're going to go on a quick standby so that we can sort out things. We're gonna be right back. We're extremely excited, and then we're gonna go through the news. And we've got a great panel of guests today. So let's do standby, and then we'll get right into it. Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to Kalshi.com to trade today.
All right.
We're back.
Did you see, we got to get started here before our guests. We got a great lineup today. We've got L2Beat versus Canton going
Andy, before we get into it,
on Twitter,
why don't we play the game that we used to play? Right now, I got Bitcoin at 97,267. Above or below by the time we finish the stream?
Above. I'm a bull.
God. Ladies and gentlemen, we got him.
So bullish.
He's back.
So bullish. We're back. It's going to be above. All right, guys, let's hop into, we just got a couple minutes before Bartek joins. We're going to get into some of the stuff that we wanted to cover today, starting with some lovely copy pasta on the timeline. Quite the drama today from our lovely friends over at Solana, who seem to love to stir the pot. So just in case you guys were wondering, Starknet has 8 daily active users, 10 daily transactions, and still somehow has a $1 billion market cap and $15 billion FTV. LMFAO sitting straight to zero. Starknet's a lovely friend of the show, as you can see there in the bottom ticker here. They have developed some epic ZK tech. I don't think this was as much of a jab as people think. If you actually look at it, it's a copy pasta tweet from this other guy. Like, I think last year it was put out. And yeah, I mean, this thing blew up. I mean, people are like, what the hell is going on? Why is a chain attacking another chain? Like, what's happening
This
here?
is very this is very dissimilar to like Alex Cutler going after Uniswap. Even that occurs from Alex's personal handles. Very, very rarely do they have the main brand accounts going at war with one another. The best take I saw on this was the prediction that this is engagement bait, and there's some sort of Starknet Solana partnership that will be announced.
That's kind of what I was thinking too. I saw Ellie from Starkware comment on it and be like, yo, like Solana has this, and this. They're doing great, like blah, blah. What I think is that Solana's getting in on the Zcash Starknet near trifecta. And I think that Solana is going to get some privacy embedded natively into the chain somehow, also through their work with X. So yeah, Rob, I think you're right. I think this is some weird masochistic form of pre-marketing for an announcement campaign.
I don't know if Starknet is incorporating. I don't know if they're going whole ZK privacy, maybe, because obviously Mert is, Zcash pilled and privacy pilled as well. I don't know if Solana is going to be like coming into that whole cabal, but I do think that there's some sort of partnership going on here.
Yeah, man. All right. Well, I just wanted to cover this. I thought it was funny. I was like, I've never seen this before, but now that you bring that up, I think you're totally right. It is most definitely a pre-marketing for it's good copy pasta, and then it's definitely pre-marketing for some sort of partnership. So we'll see how that turns out. Let's roll over to Solana's favorite friend, who, if this was a jab to Ethereum, I would actually believe it is a jab into figuring out what's going on with the Ethereum staking queue. Staking pressure eases in 2025. Hey, fund strategist is bullish. So what you guys can see here, and for the longest time, middle of last year, basically there was this massive waiting period for the Ethereum exit queue to unstake from validators. And there's a time period that you have to wait. And then if there's a bunch of people in front of you, you also have to wait for them to go first. As you guys can see, this topped out in early September, and then is absolutely kind of went sideways, chopped along, nice little bear flag there, and then dumped. As per the TA,
technical analysis on the validator queue chart.
It's not the same thing as doing TA on the Bitcoin dominance chart. And then following that, you can see that the validator entry queue absolutely skyrocketed. So kind of a nice little Jesse Livermore ascending wedge pattern, followed by the following drop down there in late December, new all-time highs, which suggests that, well, you know what this is, right? It's Tom Lee is staking. He's officially staked 1% of Ethereum supply. Tom Lee has officially staked 1% of the entire Ethereum supply and keeps staking it. And staking ETFs are actually going live now. So I just bought some staking ETFs for Ethereum. It's like a BlackRock or Grayscale mini staking ETF. And so that all that capital going to those staking ETFs is also contributing to this, because Tom Lee and the institutions, they don't want to necessarily stake with Lido or with Rocket Pool or with other kind of partners that kind of bring some sort of risk, right? Now, SharpLink has gone and staked with or restaked with EtherFi, Linea, and kind of done their own thing there. However, here for BMNR, which also has their annual shareholder meeting tomorrow, they're staking directly natively in Ethereum protocol, which is far less smart contract risk from using external providers, and it also contributes directly to this validator queue.
I'm so glad you moved off TA and you said some more compelling takes. I think Bitmine and SharpLink both deploying their ETH into staking nodes is extremely bullish. The takeaway here is that these DATs are not going away anytime soon. Check out a podcast that we did with Joseph Shalom. It's doing incredibly well on YouTube. We talked through this. We talked through some of their staking strategy. And that was recorded before they started deploying. And so you can really understand how they have now executed on the game plan that they laid out months ago. This is something I expect to continue to play out. And Andy, you bring up a great point when it comes to the staking ETH ETFs. This is something that is only going to further increase the amount of ETH that's staked in the protocol. BlackRock, Bitwise, the issuers and managers of these ETFs are then going to be managing the ETH on chain. And so right now, all you have is this inflow outflow, and you have BlackRock basically managing, how much they're going to need to sell or buy on the market in order to fund these ETFs. Soon, there's going to be a whole robust strategy here about where they're going to be searching for yield. Will it just be in the validator queue? Will there be ETFs that express more, more flavors of staking in the ETH protocol, be it in DeFi or in liquid staking or restaking protocols? All this is to be had over the coming months, and I expect we're going to get a lot more complex and robust when it comes to the types of strategies in where we're deploying ETH. So yes, the answer to this question about is this bullish? The answer is yes, and we're seeing it play out in the markets in real time. Let's move on. What do we have up next?
Yeah, I mean, I'm pretty bullish as well. I'm pretty stoked. And just in the same train of thought, another 500 Ethereum generated $1.5 million of new value in a single week, or roughly 78 or 75 to $80 million per year of yield. That's the beautiful thing about these DATCOs, right? Is that the yield generated is really, really significant. Since June, Sharplink have generated over $32 million from ETH staking rewards. This is the Ethereum Treasury flywheel. The asset is ticker is
this is what makes these actually real companies. Because anyone can raise a bunch of money like MicroStrategy, right? And go and buy the asset and then do some complicated financial engineering. I don't mean to interrupt you, but this is what actually, this is what institutional investors are looking for when you're generating, 8 to 9 figures per year, just by a very, very vanilla, safe deployment of an asset.
Yeah, man. I mean, they just keep staking.
And I think, they can continue to do this at the basic validator level. Bitmine can. Sharplink is obviously, they're getting creative now too. I think when this entire neo finance flywheel really starts to spin is when they start going further into DeFi. And I think there is protocols that can support that. So I think we will see ETH deployed into Aave. I think we'll see it deployed into lending markets. I think we'll see it deployed into neo finance in general. I think even ETH and Bitcoin can then be used as pristine collateral and methods of credit extension into exogenous sources of yield, as we were talking about yesterday. That yield can then be passed on to stakeholders. And I think we will continue to see the flywheel effect of ETH as a collateral asset extended into not just the DeFi ecosystem, the financial ecosystem at large, and beyond.
Yep. Yeah, man. I mean, look at this: 11,157 ETH in cumulative staking rewards since June 2nd. I mean, that is a massive, massive sum for SBET. And again, if the business model is simply just generating Ethereum yield, I mean, at the size that these guys have, it works. Now, SBET has actually also gone out and used Linea, EtherFi, and Eigenlayer to create more yield for themselves. They take a little bit more smart contract risk, and they're able to kind of figure that out. And so, yeah, I mean, that's sharp.
One more thing to mention here. A lot of companies that have 8, 9, 10 figures of revenue per year are trading at 10, 20, 30x multiples. We're not seeing that here. These companies are trading at their MNAV or potentially below. And I think the reason why a company may trade at a higher multiple is because of their moat. How defensible is their moat around that revenue? How feeble is it? And how futile is it? How quickly could it get taken away? As we've seen, other ETH DATs have not been able to replicate the success of Sharplink and Bitmine. And so I think there's an argument to say that these companies should actually be trading at a higher multiple to their net asset value, rather than at a premium or a discount, I think it should be at a multiple, because we've seen that their success in this particular industry is not replicatable. They've done things that others have not been able to do. And I think the market is actually mispricing these assets.
Yeah. Yep.
Okay, let's
Love
keep
it.
going. What else we got? We got our
Love
first guest coming up any minute. So let's see if we can cycle through some more news wire here. PayPal has started working with USD AI. Again, we believe USD AI is at the heart of Neo Finance because they are exhibiting what we believe is an extension into an exogenous source of yield. USD AI, if you are not aware, is extending credit to AI companies. These AI companies are paying interest on that credit, and they are passing that interest. USD AI is passing that interest back to its token holders in the form of yield. This is one of the most impressive forms of DeFi that I think we've seen in this neo finance category. And the reason, as explained by Michael Anderson from Framework, is that this is not just replicating the C DeFi wave of what we saw in 2021 and 2022, when there was obviously liquidity contagions and it all came crumbling down. This is different because they are going out in search of exogenous sources of yield. Whereas before, you saw this crazy rehypothecation cycle that created the liquidity contagion because it was all intrinsic to the same industry. Everyone had hands in each other's pockets. Here, USD AI is going outside the industry. They're going into the AI industry. They're creating new business. They're bringing that big business back to the DeFi industry. And that is what we believe is neo finance.
Yeah, man. I love it, man. I love it. Absolutely love it, man. I mean, these guys are crushing, and it's just showing the power of bringing off-chain yield on-chain.
It's the power of neo finance.
And yeah, so I love to see it. Eric, FGO, cheers. Eric, what's up,
Keep
guys?
going. What
Good
else
to
we
see
got?
you guys. Should be a fun stream today. Yeah.
Okay, PayPal, USD growth story on Aave. So PayPal crossed 400 million deposits on Aave. What's new? I mean, Aave is just rising through the ranks as one of the top banks in the entire, not just neo finance, just categorically one of the biggest banks, period. PayPal USD, obviously we just saw PayPal USD partner with USD AI as a settlement asset. We believe this is going to continue to grow. I believe they're going to not just grow in terms of billions of dollars that's added. There's going to be new stable coins. These stable coins are going to continue to grow. All of this is a flywheel effect. We're going to have more assets go go from off chain to on chain. Man, shout out Stani. Just use Aave. These guys are crushing it. I think they're going to sort out the whole unification thing between the protocol and the Labs Corp. And we're going to see Aave continue to crush it. I have nothing but bullish takes today.
Yeah, I mean, PayPal is kind of crushing too right now with PYUSD. It's pretty impressive.
Oh, yeah.
Honestly. I mean, this is like, they've not only announced this partnership with USD AI and had their full main account with 1.1 million followers retweet it. They've also got Aave maximum growth, $400 million deposited on Ethereum mainnet as well. You just love to see it. It's exciting. And yeah, guys, we're going to get Bartek from L2Beat, our first guest of the day, up. And we will be right back to get that started. Let's get the show on the road. We're going to do a quick pause and quick word from some more awesome partners, sponsors, and friends of the show, and Rob and myself. When we're back, we'll have Bartek with us, and we'll get started into this RWA tokenization categorical analysis of stats.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on-chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to kalshi.com to trade today.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Havachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz.
Halliday is unified crypto payments. Give your users more wherever they are. Go to halliday.xyz to never write a smart contract again.
Open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on-chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade.
All right, guys, we are here with Bartek, the co-founder of L2Beat. So, guys, L2Beat, as you guys know, has been in the space for quite a long time, and they have typically stuck to the technical Ethereum world, going into L2s, going into interoperability, going into DA even. But we're making our foray into RWAs, and Bartek is here to tell us about it. So, Bartek, it's your first time on the show. Thank you so much for joining. Please give us a little bit of background on yourself, and then we'll get into L2Beat's RWA trajectory here.
Great. Thanks so much for having me here. So, like, I've been in crypto for almost 10 years, so I have to consider myself OG at that point, right? And I spent a few years at MakerDAO, which probably everyone knows, like OG DeFi project, doing a lot of work. And during my last few years there, we were trying to expand to upcoming L2s. At that time, there was just a few of them, and to understand them better, I just researched, their properties. And at one point, I kind of decided that this research is valuable to much broader community than just MakerDAO. And we started with L2Beat almost like 4 years ago, I guess. And what was a very simple website back then, today became something that we frankly did not expect. I think, we became a kind of a research group, which it's vetted by the Ethereum community to actually tell everybody like which L2 does what and what are the properties. And to this end, we have a bunch of researchers. We have a fairly complicated monitoring infrastructure. We had to build a lot of internal tooling of sorts. And just to give you the sense of the scale of our operation today, on a daily basis, we get like 10 different updates from different L2s, then upgrading or changing security keys, upgrading the multisigs or some important security parameters. And we look at each and every one of them and decide like what to do with it, right? Sometimes it can be a minor change, sometimes it can be a very significant upgrade that actually decides on let's say new stage designation and whatnot, right? So we've been like called by some people to be, I don't know, like kind of a regulating agency of sorts, or maybe even a rating agency for these infrastructure projects. So whatever name you you pick, this is us. And so far the journey has been nothing but exciting, I have to say.
Yeah, it's an important role because there's so much disparate information across the entire crypto landscape. And a lot of time you have people shouting back and forth, shouting past each other on Twitter. And a lot of times we don't have a common set of definitions and standards. And so L2Beat has done a great job of pioneering a lot of these definitions, setting the standard for security. Obviously, stage 0, stage 1, stage 2 has really taken the place as the premier metric to determine an L2 security model. Far too many L2s are still stage 0. We need to get those to at least stage 1, if not stage 2 very soon. But we're not here to talk about L2 security models. Today, we're going to talk about RWAs. And you guys have identified sort of a gap in the data of what RWAs are out there now. RWA.xyz is a good friend of the show as well. And they recently have said, look, there's sort of this bifurcation in the tokenization world. You have distributed and you have represented. And so I'd love, you wrote a phenomenal thread on this, and I'd love from your perspective, first, maybe you could tell us what is L2B in your personal perspective on the RWA phenomenon and tokenization as a whole. And then we'll get into some of the issues with the representation and the data by which we're measuring these assets.
Mm-hmm. So I guess we stumbled across, if you like, RWAs by trying to assess what is the TVL of different L2s, or what we call today TVS, so that it's not confused with what DeFi Llama reports. For us, it was all about the property rights of tokens, right? Initially, they were minted on L1, and then some of them were moved to L2s. But then later, people started minting tokens directly on L2s, either natively or through some kind of bridges. And one of the most important metrics that we track, and we spend a lot of time thinking how that should be tracked properly, is essentially the TVS, right? Which gives you the basic ranking of how big L2s are. And I guess some time ago, a lot of chains started, from our perspective, inflating this TVS with what they called RWA assets, right? I think one of them most prominent was ZK that had a lot of different RWAs minted. And this is the first time where we actually looked very deep into what they really are. And we were perplexed because there's not much you can do with them, right? It's like literally an on-chain record of something, and then nothing happens with the on-chain record. It's like literally someone said, hey, I've just minted, I don't know, $5 billion worth of something, of an asset, right? And like we decided, hey, no, this is not fair. You can't really mix, that type of TVS with what people normally assume to be a TVS, which is more associated with, let's say, a circulating supply of tokens, right, of crypto native assets. So there was a very deep rabbit hole to look at different RWAs, and I was particularly interested in this because in my previous startup, we, with my other co-founder, we looked at different decentralized trading venues for RWAs. That was 5 years ago, right? So I was, fairly comfortable at looking at these different tokens. And that was the first time that, we had an internal discussion at L2Beat. What should we do with it? And we ended up essentially saying, hey, first of all, RWAs are different, right? So like putting them in one bag and just saying, hey, this is a total TVS, that's misleading, clearly. Because suddenly, in the past, you had this, question of zk sync with a lot of TVS coming from RWAs. Now, of course, you've got a much bigger, interesting case of Canton, which is kind of similar because people keep asking things like, what is going on, right? Like, what's going on Canton? That suddenly it has like, 98% of share of RWAs? Like, what happened? And of course, we were thinking about our own classification. So this is a very interesting issue, I have to admit, right? It's a hard issue. It's a hard thing, because there are a lot of discussions in the space. What should be counted as actually a useful token? But we need to have this discussion, right? We do need to wrap our heads around that, and eventually we need to agree at some sort of a classification. Otherwise, it's just a messy information.
Yeah, it feels like right now so there's this whole pipeline, this tokenization pipeline, right? And you walk through some of this, how presumably we don't know for sure because a lot of these assets are opaque, but these tokens are minted when someone subscribes to the money market fund, and then these tokens are burned when someone redeems, and this is why the balance is going up and going down. But and so we don't really see those functions, but we can assume that they exist. We know the money is there, right? Whether it's represented or distributed, the money is there and it exists. Maybe not even on a blockchain in some cases, but even on a database, right? Mm-hmm. And what we're seeing is that these tokens are currently limited from existing in the same composable DeFi ecosystem that we've come to know and love, right? And so it feels like there's an industry here. It feels like it's waiting to be unleashed. If we can only just, from a regulatory perspective and a technical perspective, we can unlock a lot of this capital that is just sitting in these money market funds, and we can make it composable with DeFi. Do you see this happening? Is this what you're hoping happens? Maybe you can just walk us through this pipeline and what you think is happening.
So, for me, unless we unlock these funds, then anyone can essentially mint a record on blockchain and claim that represents some real-world value. I mean, the example that you gave, that sounds like very legit, right? There's a let's say, regulated fund which will mint tokens on issuance and will burn on redemptions. But what do you do about someone having let's say, a private credit facility or something, right? And it's completely opaque. So you can't really know if minting really represents, something that really happened off chain, and what does burning even mean, right? All you see on blockchain is minting and burning. So, so we think that. For these tokens to be actually counted and useful to anyone, this kind of an unlock must happen. And for this unlock to happen, there must be some transparency about what you're really trading, or, however you want to use these tokens, right? If these tokens don't move, they only minted and then burned, then I would argue that it can be anything, really. It can represent something, but it may not represent anything, right? And it's almost impossible for an independent observer to verify. Once these tokens are traded on open markets, then presumably you have some price information, you have maybe some regulator that is involved in this, right? Maybe this is more open. market, if you like. It's not like closed little private market for whitelisted participants. And then suddenly this token becomes very relevant, right? And suddenly we can talk about not just like unlocking, but you can talk about circulating supply of these tokens. And this is, by the way, the same problem that we have with crypto native assets, right? There are tokens that has huge total supply, but very, very small circulating supply. And most metrics, they only look at the circulating supply, because locked tokens, they just, it's an almost meaningless measure. So we do hope that the RWA revolution really will actually allow permissionless access of some sorts to these tokens. And if it doesn't, then I wouldn't really call it a revolution, right? I would just say that, hey, these banks or traditional financial institutions, they are just replacing their own internal databases with, like maybe a newer technology that they might actually call it a blockchain, but in fact, like from my or your point of view, like nothing changed, right? We don't know really how internally, let's say DTCC, what kind of software do they use for settlement and whatnot, and we don't care, right? It's like not something that we can verify. It's just not something that we can observe. It's not something that's transparent to us. It's completely opaque. They can use whatever they want. So if now suddenly they decide to use Canton, like what difference does it make to us, right? It's the same thing.
Yeah, it certainly is. And to them, that might be an upgrade. To them, maybe it's a better accounting, right, than Excel.
Maybe,
right?
maybe, but it's like any upgrade, right, of their internal software.
Exactly. It does feel like what's one step closer, I must say. It feels like maybe it takes decades, but eventually we will get to a point where all money is on chain, and maybe some of it is on a more private or permissioned L2, and some of it's on a more public, open, composable blockchain. And there are degrees to which this is more helpful to the overall population, and it does democratize access. But I totally agree with you. At least to this point, you've gone and you've looked into the security set of Canton and some of the other mechanisms here, and so you've looked into this. You can speak upon the security model that these things have. And right now, these are just databases. There's nothing open and composable about these networks, but it does seem like at least the Overton window is open for these companies to start embracing something aside from their own internal databases and becoming one with the rest of the world and operating a more composable form of finance. They've come along to this idea of tokenization. Yeah, please.
I just wanted to say that, I do have a deja vu from 2016, when everybody was creating consortium blockchains. I don't know if you guys remember, these times, but Canton is not the first network that's trying to solve the problem, right? And, my understanding, I don't have a deep understanding of Canton, but, what I know is that, it's like, it's clearly a consortium chain, right? There are a bunch of organizations that are validating, the network. And if you or I wanted to validate that network, I mean, I'm not sure if we will be allowed, because it's just a closed club, right? They may allow more members, obviously, but, this is like a classic definition of consortium. Moreover, you and I cannot validate the global state of that network. So we can't even complain, if they change something, right? Because it's not verifiable. So for all intents and purposes, it's their own private database, which is completely opaque to us. Whether, internally it's using some hashed link data structures or not that we tend to call blockchain, it's irrelevant, right? Mm-hmm. For me, blockchain is much more than just, linked blocks of data. Yeah. It's just something that needs to have more properties, because otherwise it's just like it's too simplistic definition. Why would we care what's minted on Canton that's a little bit beyond me, frankly. I don't know and I don't care what's minted on Canton, and that's why I have some personal issues with some of the metrics that RWA XYZ guys are proposing. I love this site. I use that site often. I think they doing incredible job. However, like conflating public and completely private and opaque chains, I would do it differently, frankly, right?
Yeah. The last thing here from me is that I'd love to host a session, call it a debate, call it a workshop, whatever you want to call it, of having you and Adam from RWA XYZ, having you both on the show and working through maybe some of these classifications, taking some lessons as to what you've done on L2Beat and learning a bit about the evolving RWA space and everything that's happening in neo finance and getting you here together to hash things out. Would you be open to something like that?
I definitely would be open. I say even one more thing here. L2Beat at the moment is actively looking beyond looking at just L2s, right? We will very soon launch interop dashboard where we will provide some important metrics on interop solutions, bridges, intent frameworks, and whatnot, right? With the goal that soon we will also add something very similar to the risk framework that we have for L2s, but we will try to create a similar risk framework for interop. And the next ones are actually RWAs, right? Because I think that there's just too much confusion, and we feel like we gained a lot of experience looking at different L2s and working on the risk framework. Now we can apply this knowledge and also our internal monitoring infrastructure to, like I say, interop projects, and then later to RWAs. And why this is all connected? Because RWAs actually, they're issued on different chains, so we need to know whether these chains are secure or not, and they are very often interconnected. Like if let's say they use like 0, you really want to know who are DVNs and what it means to you, right? Because there's another counterparty and there's another counterparty risk which may or may not be acceptable to you if you care about let's say censorship resistance, right? And these types of properties for your assets.
Incredible. We're very aligned here. We believe in user education. You guys have done a great job of cutting through the noise, really separating what some of these things look like, and setting definitions and standards for the entire industry to rally behind. Bartek, thank you so much for being here, and I do look forward to having you on and discussing more about the evolving nature of neo finance and everything happening here. It's exciting nonetheless.
Yeah. Thank you so much, guys.
Cool. We'll see you next time. Thank you, Bartek.
Thank you.
All right, guys, we'll do a quick commercial break and we'll be right back. Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to Kalshi.com to trade today.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Hibachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform. All right, here we go. Alrighty, Mike, welcome to the show, man. Good to have you on. The co-founder of Figure, big news today, the on-chain public equity network running on Provenance blockchain to allow companies to finally list their equity native on-chain, something that we've had a lot of conversations about here on the Rollup. It's good to have you on, man.
I appreciate it.
Yeah, man. I mean, I had a good conversation with Pratik, the portfolio manager of Van Eck, and he talked deeply about how this was the year of this concept of tokenized equity really taking off. And it seems like you guys are ahead of the game.
I think I think it's important first to mention like how meteoric the rise of Figure HELOC has been, because that sets the stage for a lot of this. And so $20 billion of home equity loans issued on chain. And you guys are now expanding that with the launch of Open, which is going to be the on-chain public equity network. That's what Open stands for there. Also running on Provenance blockchain. So this complements all of the HELOCs that have already been issued on the chain. So yeah, please take us through what has been the thought process going from the Figure HELOC product to ultimately, why you decided to launch this Open product on Provenance.
Yeah, and if you look at Figure HELOC, if you look at CoinGecko, I think it's like the 12th largest crypto asset on public chain right now, and it drives. We launched a product on Solana called Hastra, which is a yielding token that's getting looped through Camino, and the yield on that token is being driven by those HELOCs on chain. So it's pretty cool application, and we think massive extensibility there. But we've always felt blockchain does three things that matter. It gives you reduction in transactional expense, it gives you liquidity, and most importantly, it gives you access to DeFi. And we've clearly demonstrated the value prop of that on the credit side with what we've done with home equity line of credit, and now with mortgages and other credit products. And we felt that was extensible into equities. And the challenge historically, obviously the prior 4 years, it was very difficult to try to do a new public equity issuance on blockchain. In fact, it was very hard for Figure to go public before, and obviously we went public back in September. But when we went public, we said we intend to do a blockchain native public equity issuance. And what we're doing that's very different than what our peers are talking about, most people are saying, well, I'm going to take the security that lives on the NASDAQ or the NYSE, and I'm going to tokenize it and represent it on blockchain so it can trade 24/7. What we're doing is actually issuing the equity on chain. So it doesn't live at Deposit Trust Clearing Corporation. It's not traded on the NASDAQ or the NYSE. It's actually a different security than the NASDAQ version of Figure Equity, native on public blockchain. And what that does is it affords us some really valuable things. Most notably, we can take that security into DeFi, borrow against it, lend it out, and control stock loan. Like there's real economic benefit that accrues into the buy side because of doing this native on public blockchain. But also because it's native, it supports this whole idea of wallet connect. So our stock is going to trade on our alternative trading system. It's a limit order book, bids and offers, normally just what you'd see if you were trading on the NASDAQ or the NYSE. But you're going to be able to attach with your wallet. You don't have to go through an introducing broker. You don't need Robinhood or Goldman to let you have access to that marketplace. Just like any decentralized exchange, you're going to take your wallet with your stablecoin or your security, you're going to attach and you're going to trade. And that really opens up access to the marketplace, makes it a truly global marketplace, and that's why 24/7 trading does matter to support that global access. But what we're doing is very, very different than what the rest of the market's been talking about. And we hope that our own stock will be the first thing issued on Open, hopefully by the end of this month, fingers crossed, could bleed a little bit into January or into February. But we won't be the only one doing it. We have folks behind us that are going to come on as fast followers. And this isn't a one-off or proof of concept. We think this is the beginning of a completely new blockchain native public equity market.
We have to roll up. We've seen the rise of, and it's really the evolution of what we're calling the legacy Wall Street era, which has been this legacy banks are now exploring stable coins. They're getting into tokenization, and they're moving more of their business on chain, or at least exploring that. And then, Andy and I come from this crypto native background. We've been in crypto for the last 6 years, and we've seen this crypto native infrastructure slop that never got product market fit. And that was a problem, right? And so both of these industries feel like they're converging and they're evolving to the same point. And this is this neobank explosion that we think isn't just going to be stable coins and tokenized cash. You guys are already stepping into this as well. We're calling it neo finance. It's the idea that we're going to not just tokenize stable coins and cash. We're going to evolve the entire industry here and build a lot of the financial tooling around some of the core components. And we're going to do it on chain, and we're going to do it digitally so that the entire industry is more efficient. And it's really a maturation of the entire industry. And so I'm curious how you're seeing the market, because I take it you've seen Wall Street, you've seen legacy finance, and now you've seen the crypto side of the world. What are the most important trends that you're following that you think are going to continue to persist into 2026 and beyond?
Yeah, I think if you look at fintech, I view fintech as analogous to Web 2.0, right? And fintech did a phenomenal job in terms of product market fit, customer experience, mobile application and capability. But fintech is really rooted around the idea of the super app, right? Like, I want to build an application that you're going to do everything through. You're going to borrow through it, you're going to lend through it, you're going to bank through it, et cetera. What blockchain does and what Web3 does is it changes that paradigm and puts control back to the user through wallets. And now I'm going to have a wallet. It's going to custody my assets, my identity, my liabilities. And I'm going to take that wallet to whatever distributed application I want to trade and transact and borrow and lend. And I'm going to be able to pick the best of each one in each marketplace. And so rather than, SoFi or Robinhood controlling everything that I do through a single app, I'm going to have the ability to take my wallet and choose where I go to transact and where I go to participate. And I think that's a huge benefit to the consumer, to the user of the application. It means that there's a lot of work we have to do on the wallet experience because, historically it's been somewhat challenging. Like, I wouldn't feel comfortable telling my dad to download a crypto wallet and start transacting in dApps. But we'll get there, right? And we'll get there pretty quickly. And I think that's really, the end of the super app concept and the development of a wallet-centric dApp construct is what blockchain's really going to herald in. And that's the big trend that we're buying into for the next couple of years.
Yeah, Mike, maybe you could just talk to us more specifically with that context in mind, how this applies to the open stock and the open issuance process, and how kind of making these securities exchangeable, how that kind of flows into this bigger thesis.
Yeah, so I view the ATS, the marketplace, as a dApp that you can attach to and trade. And there could be competitive dApps out there that you can trade to as well. But the key is you're taking the stock with you in your wallet, right? It's not sitting at DTCC, it sits with you. You own it, you control it. You want to borrow against it, you put it up as collateral. If you want to lend it out, you set a rate at which you lend it out. But you have that control now, and you take it with you as you move from venue to venue. And so the way Open's set up is it exactly aligns into this, as does our democratized prime ecosystem. It's one DeFi protocol, but you'll be able to choose what DeFi protocols you go to ultimately to lend that stock out and borrow against it. And that, again, just empowers the user to make best selection and provide best of breed services.
What is your vision for Open as it expands? It sounds like you're starting with Figure stock, which is listed on NASDAQ, and you guys are listing that initially. But I take it this is just the beginning, right? You're going to build out this entire asset universe, and it also sounds like you've got the Providence blockchain and all of its DeFi capabilities, but it's a big world, it's a wide open world of composable blockchains out there. What are some of the more expressive applications that you foresee? Will you connect to some other blockchains out there? And how do you see this asset universe expanding?
Yeah, look, I think to the first point, we already have verbal commitment for a second company to issue on Open. And then I've been public out on X, having dialogue with a lot of the DATs about the fact that they should be listing on Open. And the reason being, if you're a DAT, you're trading below NAV, you really want to be able to offer a tender to swap stock for your crypto assets that would bring the price right back up to NAV immediately because of the arbitrage. Well, you can't do that on the NASDAQ because there's no way for you to distribute crypto to that equity holder. whereas an open, it's a digital wallet. So same wallet that's holding the equity can hold, you know, whether it's Bitcoin or Solana or what have you, you know, obviously using MPC backend for keeping it on the native networks. And so, you know, I think we're going to have a very robust pipeline of issuers on open. You know, this is not, as I said, it's not a proof of concept. It's not a one-off for Figure. It's the beginning of what we think is the rival ecosystem for the traditional, not just NASDAQ and NYSE, but globally. I mean, we're going out to the LSE, we're going out to the Hong Kong Exchange. You know, the beauty of blockchain is there's no domicile to it. And, you know, we certainly have to adhere to the regulations of the issuers in their countries, but we can do that pretty efficiently and, you know, really just democratize global access to the equity through chain. And then, you know, obviously downstream to DeFi. So that's how we're thinking about it in terms of subsequent issuance. And then remind me what the second point that you asked.
Second question is about a more expressive DeFi ecosystem. Like, is there any companies out there, you know, that you think are doing a particularly good job in the DeFi ecosystem? And generally, how do you see Providence and Figure and Open connecting to the rest of the blockchain ecosystem that's out there today?
Yeah, there was a point in time where I was thinking that, you know, one blockchain would rule them all, in Lord of the Rings analogy. You know, now I view that there's going to be lots of L1s, and I think the work that we do, you know, we're minting yields native on Sui and Solana, for example. You know, we have Hastra on Solana. We have other L1s that we're bringing Figure assets over to provide collateral and yield value and trading utility. And so I see extensibility with open as well. So, you know, I'd like to get to a point where you might buy Figure stock on the ATS on Provenance, but then take that in your wallet to, you know, Camino, for example, to finance it there, or to Radium to stand up an AMM pool, right? And, you know, that extensibility into other DeFi protocols, which requires some lifting from a regulatory standpoint, certainly is easier if market structure passes, but there's ways to do that today. And, you know, we think that there will be a lot of interoperability, just like we're doing with the loans today.
Okay, so that's you know, the Web3 end of the spectrum. On the other side of the spectrum, you're affiliated with SoFi. I think you're on the chair there, and you know,
I'm not. I started SoFi, but I'm not part of SoFi anymore.
Right. Okay. Well, when you were, I'm curious how you think that industry will evolve. Not speaking for SoFi in particular, but as like this legacy banking infrastructure evolves, you know, it sounds like we're headed into this world where a lot of these traditional banks end up becoming this neobank thing with a wallet embedded. How do you see this playing out? Do you see more mergers and acquisitions happening? We've seen crypto M&A be really hot, or do you think a lot of these are going to, you know, they're going to be built internally? Well, how do you see this evolving over the next few years?
Yeah, look, I mean, a lot of reasons why crypto M&A is hot is because most crypto firms are subscale, and that, you know, that needs to change. And so, you know, certainly a lot of the M&A activity has been driven to get to scale. You know, I think the SoFis of the world are still very focused on the super app construct, which, you know, I don't see persisting. I see the Genius Act, and in particular, your ability, ultimately, you will be able to earn yield on your stable coins. And, you know, as that happens, that's going to come at the expense of bank liabilities. And it's really going to perpetuate a narrow banking construct, right? Where you're going to take the bank, which, you know, traditional roles as deposit gatherer or lender, and split those into two different businesses. You're going to have a deposit gathering business and a lending business. They're not going to be the same thing. I think what's also interesting is with yielding coin, if I'm building a challenger bank, like a Chime, for example, I'm not building that on bank rails anymore. I'm building that on stablecoin rails. And because I have fiat on off ramp, I have, you know, the ability to move money. And what will be really interesting, I think, this year is the beginning of challengers to interchange using stablecoin as payment method. And I think, you know, paradoxically, the banks like Chase will actually drive that innovation. And so I think we're going to get some pretty significant innovation coming in from those traditional financial services firms. And, you know, if you just look at the open transaction that we're doing with Figure, you know, Goldman, Morgan Stanley, and Canton are all underwriting that deal. And they're underwriting it because they understand what a watershed moment this is to issue public equity native on chain. They want to be part of that ecosystem. And so I think you're, you know, certainly with regulatory clarity, going to get a lot more participation from those entities who are very well capitalized and can be very aggressive. And, you know, I think we're going to see a lot of innovation happening across the Web3 space.
The use case for the DATs Makes perfect sense, as arbitrage could bring those DATs back above MNAV. Are there any other use cases that you think are particularly suited for public issuance on chain? What are some of the other things that you're looking at?
Well, I mean, some of the easy ones are if you're a heavily shorted stock and you're worried about naked shorting, you can't naked short on the blockchain, right? You can't sell what you don't have. And so there's some benefits that you get in that front. But really, I think every public company is going to owe it to their shareholders to have a blockchain native share class because it's so much more valuable to the buy side. It's better collateral value and you control stock loan, which is a huge economic. And so, you almost as a service to your shareholders need to have that blockchain share class. It's not a heavy lift to do. You're a public company, you do another S1 or an S3, nowhere near as complicated as your first S1 when you initially go public. And so, I think that the buy side is going to push companies to do this, and the companies themselves are going to have a responsibility to do it. So, that's why I'm really bullish in terms of adoption here.
Yeah, Mike, last thing for you from my side. Does this neo-finance term resonate with you? What does this kind of convergence of legacy finance and DeFi look like from your perspective? How would you kind of define this trend?
It's something, right? Whether we call it neo-finance or what we call it. I'm not sure I buy into the neo-finance name yet, but the concept I buy into, which is I think that the wallet-centric DApp structure market system is going to end up beating out the super app and becoming the next stage of building, right? So I view, traditional finance, what we had in Web 1, internet enabled, basic websites, etc. Fintech in Web 2, more ubiquitous mobile apps and capability and so forth. I think what Web 3 will bring in is wallet-centric DApp services that really empower the user and bring control back to the user through self-custody.
And do you think this is a result of further democratizing access? And we're almost going to get this iPhone moment with mobile apps. This is sort of the death of the financial advisor, and we're going to kind of take finance into our own hands and kind of explore finance like an internet browser going through all these DApps.
Yeah, I don't know if it's death of the financial advisor. I think what it does is it introduces different ways to manage your finances.
Yep. Did we lose Mike there?
All righty.
I think we might have lost Mike, unfortunately.
The death of the financial advisor got him good.
Maybe we'll get Mike back here in a moment. He dropped. All right, why don't we do let's do a quick standby and we'll be right back. Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
All right, we got Mike back. Mike, man, it's been fantastic. Congrats so much on all the success of Figure HELOC and Figure in general. Open is a big launch. We believe tokenized equity stocks is going to be a trend to watch in 2026. Close this out. What are your closing thoughts, and maybe you can leave us with a word of wisdom?
Look, I just think everyone's going to be blown away by how much happens in the blockchain space this year. And especially we get some regulatory clarity. We can codify in law what the current views of the regulators are. It's really going to future-proof our ability to execute. And so, just hold on to fasten your seatbelts because things are going to move fast.
Yeah, it's a roller coaster out there. Thank you, Mike. Appreciate it, man. Congrats on all the success and congrats on the open launch.
Yeah, thanks for having me. I appreciate it, guys.
We'll see you next time. Cheers.
Cheers, man. Alrighty.
There we go. I love it. Yeah, it's a pleasure. Let's do a quick commercial break and we'll be right back with our last guest. Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to Kalshi.com to trade today.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Havachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz.
Halliday is unified crypto payments. Give your users more wherever they are. Go to halliday.xyz to never write a smart contract again.
Open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to kalshi.com to trade today. All right, guys, we are here with the CEO at Project 11. These guys just raised $20 million to tackle quantum threats against crypto. This is something that sounded woo-woo for so long. We've been hearing a lot about it. We've got Alex here to tell us whether quantum is real or if it's going to take another 25 years, like they said 25 years ago. Alex, congrats on the raise. Welcome to the show.
Hey, thanks a lot. I really appreciate the opportunity to be here.
Absolutely, man. We've seen this play out. Like, we know that every once in a while there's a breakthrough, but it's still, we also heard the same thing about AI, right? AI was coming, automation was coming. All of a sudden it was real. What is the state of quantum these days? And then I know there's a whole flip side to this, which is what is the state of quantum resistance? And it feels like the good and the evil powers are fighting against one another. But first, why don't you start? Let's actually, it's your first time on the show. Why don't you give us a sense of your background and how you arrived here?
Yeah, cool. Great to be here again. I'm Alex, CEO of Project 11. I first got interested in Bitcoin about 11 years ago. I was a Green Beret, U.S. Army Green Beret deployed in the Middle East. And my first exposure to it was kind of around refugees who had lost everything in the Syrian civil war. And, it had maybe a keen or an appreciation for money that wasn't necessarily controlled by governments, right? So that was my first, how I first was exposed to it. In grad school, I got interested in cryptography after I left the Army, and then had a bit of time as an investor at A16Z before joining a project in the zero knowledge space called Aleo before finally ending up here. So I guess the takeaway there for the context of this conversation is, I'm a believer in this technology because I've seen firsthand how people in the real world need it. And, and I like to think of myself as very pragmatic in terms of working on problems that will matter in the long term. I'm not really that interested in working on stuff that's like, hey, 6 months, this is the meta, I want to jump to the next meta. I care about this technology in the next decade or century. And to me, the problem of what happens when a quantum computer shows up and threatens all the underlying cryptography for all these systems, like that is the biggest, it is the most existential threat that crypto faces, right? So it's without a doubt true that when a quantum computer of sufficient scale and fidelity arrives, it will effectively destroy the concept of ownership in blockchains, right? Because fundamentally, your digital signature is how we send assets. It's ownership, right? If I can produce the signature, I own it. If you can produce the signature, you own it. If I can forge your signature, not your keys, not your crypto, right? So it's without a doubt true that quantum will break effectively everything that we've come to believe about digital, or everything about how digital ownership works. Now, it's a question of when, and to me, why did I get into this, and why did we start solving this problem? Look, the question of when is always a hard one. To your point, you actually, I love how you introduced it, because you're like, hey, is it always 25 years away? But then you immediately followed it with the example from AI. And unfortunately, if you look at technological breakthroughs throughout history, it very often follows this non-linear path. It's like, oh, this is never going to work. This is never going to work. Boom, it works. That's it. The light switch is on, right? I think people, for whatever reason, when it comes to this problem, people have in their head that this is going to be different. There's going to be some kind of linear step path. And I find that especially shocking in light of, like, if you think about the applications of a cryptographically relevant quantum computer. I mean, if you just spend a few minutes thinking about it, you realize there's almost no incentive for the person who builds it to reveal its capabilities, right? So I think there's a lot of reasons to believe why we may not even know this has happened until after the fact. And again, because the consequences are so existential, to me, even a 1% risk that it could happen in the next 5 years is too much, right? If we think about the total value of digital asset space today, I haven't checked prices, about $3.2 trillion. You're betting $3.2 trillion on that, mm-hmm. Right? And so again, I don't think we can discount the fact that it could happen that soon. And if you look over the last 18 months, I'll just name two things quickly. Google, in particular, last year made this major breakthrough in error correction, which got quantum computers down to what's called below threshold for the first time. What that means, effectively, the takeaway is that they took it from being a science experiment to showing that it's an engineering problem. And now it's just really how fast we progress along that path. So maybe I'll end there. But like, my view is that the conservative, which is very aligned with the philosophy of crypto, the conservative approach is to say, hey, let's prepare for this now, because it's going to be hard, and we can talk about why it's going to be hard. But this is an urgent problem if we don't start tackling it now, because once it becomes obvious, it may be too late.
Yes, at least now it's an engineering and I realize there's also plenty of positive repercussions as a result of quantum computing as well.
Totally.
It's a technology. It depends if it's not, it depends whose hands it falls into, right? Whether
Yes,
it's
we should welcome this.
right. And so at the same time, if it's abundantly available, it will fall into the wrong hands and people will try to use it unless there's quantum resistance, which is what you guys are building for. And so, now that it's an engineering problem, at least we can measure how far along we are on that path until there's some step function that, thrusts us even further along that path. But what is the flip side to this? You laid out, basically where quantum is and how we should think about it. But what is the state of quantum resistance, and how can you effectively protect against the developments that are happening day in and day out on quantum?
Great question. I just want to add one little note to kind of the quantum piece and just talk about the economic incentives for quantum computing development. Look, there's $600 billion worth of exposed Bitcoin that public keys are exposed so that a quantum computer could theoretically attack. A significant percentage of that is Satoshi's Bitcoin, commonly perceived as lost. It's hard to point to another use case of a quantum computer in the short term with that big of a price tag attached to it. And I think if you put those two together, you realize that the first generation of quantum computers will probably be built explicitly to harvest lost crypto. I think that's what the economic incentives point to. Okay, so switching gears now to what do we do and put the state of post-quantum cryptography. The good thing is, actually it's not like we woke up to this being an issue yesterday. In fact, for 3 decades now, for basically as long as we've known that quantum computing was possible, cryptographers have worked on developing new cryptographic algorithms to counter it. And last year, NIST, the National Institute of Standards and Technology, just standardized the first 2, one called MLDSA and one called SLHDSA. And so if you follow any of the dialogue around Bitcoin on this, a lot of people talk about SLHDSA, which is a hash-based signature scheme. Hashes are also used in mining and other places or in these protocols. And so we have these replacements for the vulnerable signature algorithms, which are ECDSA and Bitcoin specifically. And you could from a purely technical level, just swap those in. So the good news is we have some candidates. It's not like we have to do some new science to invent things. The bad news is we're talking about a very significant change. Imagine you're living in a house and your foundation is ruined and you need to replace the foundation. That's not a simple thing.
I think I know the answer to this, but this would require a hard fork, right?
There are ways, if from a, not to be pedantic, but you could do this as a soft fork. I think this is a distinction without a difference, though, because it's such a huge change that I don't know if it's really worth even calling it a soft fork or a hard fork. Because here's what needs to happen. I'll tell you for in Bitcoin's case specifically, and this varies by network, but more or less this is true across the board. Protocols need to change. What do they need? How do they need to change? They need to basically add support for these new signature algorithms which don't exist. Why is that hard? Well, because these new signatures are a lot bigger, a lot slower, and don't have these nice properties of aggregation like the ECDSA we've come to rely on. Bigger signatures may not matter for something like Bitcoin. But imagine Solana, and we've actually done some work with the Solana Foundation to kind of put a test bed or a test net together to experiment with this. If you put a 20x transaction size in there, that's going to affect throughput for things like Solana, advertises itself as a high throughput blockchain. So there are consequences, right? So, but that's the first layer. So even assuming you get consensus across, hey, this is the algorithm, we're willing to eat these costs, that's baked in. That's not all. And this is, I think a lot of people kind of think of this as if it's going to be like an ETH1 to ETH2 or like a Bitcoin Cash fork. No, everyone who currently has assets in their wallet today must move them. Wherever your assets are currently secured will not be safe post Q day. It's a full lift and shift. Protocols have to upgrade. Smart contracts have to redeploy. All assets must move. That is the scale of this.
I'm sorry. Did you said Q day? Is that like the moniker for like the day in which it all we hit singularity, quantum computing is real, everything has to change? That's Q day.
Yeah, we call it. It's like I guess it's like the quantum version of Y2K. Yeah, we call it Q day. Yeah, so Q day, I guess to rigorously define, it's like the day a cryptographically relevant, a quantum computer that could break Bitcoin shows up and goes online. That's what we call Q day.
Okay, and so a little bit more specifically, it makes sense how you're preparing, what kind of technical lifts have to happen both on the Bitcoin side as well as on the Solana, Ethereum, everything has to change. I also see Vitalik is posting a lot more how to make these things quantum secure. How much are you pulling from that? What is maybe you could help us kind of parse through if have you read a lot of what he's been putting out there, and could just help us understand like how Ethereum and Vitalik are looking at quantum security?
Yeah, and actually, we're collaborating with Justin. Justin's kind of putting together, Justin Drake putting together the lean roadmap, and part of the lean roadmap is PQ. And like I said, I don't want to overstate here. Ethereum is like all of these decentralized networks is a broad collaborative effort, but we've worked with them on discussing some of these issues, and we have some of our own solutions in mind for how we can contribute, right? But broadly speaking, the things that need to get solved are, again, the protocol level cryptography. And what Ethereum is doing, they're kind of thinking about, hey, we have this proof of stake. This is distinct now from Bitcoin. In proof of stake, you have people that are basically invested, and then they vote effectively like, hey, this block is valid, this one is not. And that vote has a signature attached with it. That signature is insecure. So you need to replace those. That's a lot of like what the EF has focused on currently, is replacing kind of the digital signatures in the proof of stake consensus algorithm for post quantum secure variants. Now there's, again, the whole other problem, and I have to say this is kind of a little bit closer to the area that we focus on, which is the user assets. You own assets. How are your assets made secure? How can we migrate them from where they are currently insecure to a secure place, right? So the problem of user migration and securing the value directly is sort of the layer that we tend to focus more on. Although again, like we work across the stack because it's quite hard to break this problem up because these digital signatures go so deep.
Right.
It sort of has impacts all over, just like the foundation of a house.
Yep. Okay. And so is there anything that a user can do outside of the protocol to help protect themselves, like migrate to a more quantum secure wallet? How can we protect our own assets outside of soft forks, hard forks, and what the protocol does?
Great. So the answer depends on the network. So for Bitcoin and Ethereum, technically, if you don't spend from a given address or UTXO, your wallet is hidden behind a hash function, right? So your raw public key, as we call it, which is kind of your true identity on chain, is not exposed to a potential quantum computer. So this is why if you go, we have on our website, project11.com, we have something called the risk A list. And it basically tracks all the Bitcoin addresses where the key has been exposed, AKA someone has spent twice. That means the key is exposed. So if you don't spend twice from the same address, in other words, if you have good wallet hygiene, you're okay for the moment, right? Now, there's maybe some point in the future when quantum computers get fast enough that even that's not okay, but for the moment, you're okay. In Ethereum, it's a lot harder to do that, right? Because we have accounts and like you're always interacting with the same contracts. It's just generally speaking more difficult. But there are increasingly, and this is an effort that we're contributing to, ways to implement post-quantum security at the smart contract wallet level. And just as to kind of to tease some of like what we've got coming up this year, like there are ways to solve that at the smart contract layer to basically decouple your asset security from the protocol migration timelines, which we want to be very deliberate. Like we don't want to end up in a world where it's like Q day and then everyone's just running around with their hair on fire trying to fix, like ironically, the biggest cryptographic vulnerability is someone fat fingers something in that world and then a bunch of assets get lost, right? So decoupling the asset security from these protocol migration timelines is really kind of our core ethos and solving that problem for individual users. But today, good wallet hygiene is the way to go. And then if you want to see kind of what a potential migration flow could look like, we have a tool for Bitcoin called Yellow Pages, yellowpages.xyz. You can go check it out. You basically create a new post-quantum key pair, attest to that key pair using your Bitcoin wallet, and that kind of like, that effectively is an example of what a migration will look like to a post-quantum wallet at some point, right? Because Bitcoin doesn't support this cryptography yet, it's not fully complete, but it's like a mechanism for users to kind of get a taste for it.
Got it. Okay, very cool. And you outlined really what the path is here, but maybe you could just more specifically, like, what are you guys going to spend this money on? You got $20 million in the bank from this latest raise. Is it just hiring as many and as talented engineers as possible to work on this, or is there more like how are you going to put this capital to work?
Honestly, I think we could have easily raised 100 in terms of like the scale of the problem. We could have raised $100 million more, right? And that's just because, like, look, we have $3.2 trillion of digital assets. It's all zero if this problem isn't solved. It's very wide ranging. Like Bitcoin looks different than Ripple, looks different than Solana. All these networks are in all these different places. Every user has to migrate. By the way, we're not even talking about stablecoin networks that have admin keys that themselves are exposed, right? So it's like, this is going to be a huge issue, right?
Yeah.
And so I think fundamentally, like, what are we doing? What are we spending the money on? First and foremost, we need to find the talent that can engineer these solutions, because right
Yeah.
now no solutions exist at all, right? So we're tripling the size of the engineering team. We're hiring a bunch of other product folks to help basically design these migration pathways and these new basically forms of crypto agile custody solutions, right? So we're doing that, and then it's just about going and basically getting the business to get started effectively of building these within certain ecosystems, right? So we did some work with Solana. We expect to do a lot more work with protocols in the coming year, and potentially we even may come up with our own protocol. We haven't fully decided yet. But we may come up with our own protocol that effectively incentivizes, that solves the cold start problem for post quantum migration, because it's kind of it's a bit of a chicken and the egg, right? Like, there's not a place for someone to migrate to post quantum. There's not like a destination for them to go. But they're also, like you articulated at the beginning, like, is this really 25 years away? Do I need to go? I mean, probably
Right.
most consumers are going to they're not going to do anything unless there's an incentive or there's a fear is high enough, right? You could solve that potentially with a well-designed protocol. Bottom line is, like, at the end of the day, what we do is future-proofing, future building the digital asset rails of the future. And by the way, just to call back to something you said earlier, quantum computers enable new forms of cryptography and new techniques to secure information that have never existed before. Let's not forget that. Like, this is going to unlock doors just like it locks them, so to speak.
Yeah.
And so again, like, that's why for us, I always like to kind of remind our team and remind everyone who follows us that, like, we're not doomers. Quantum computing is what we should all want to happen. We just have to prepare for it properly, and then we can leverage it, and we'll all end up in a world where we're better off.
And if you do end up decoupling the asset layer from the protocol layer, this protocol that you're talking about building to give people a place to go that is quantum secure, does that look like a wallet, so that that's the place where they can migrate their assets?
I think I'm hesitant to put a name on it, because I think, first off, there's many different flavors of wallets that look very different.
Right,
Like, for example, like a Privy type thing is very different than a MetaMask type thing, is different than a Coinbase custody type thing, right? But fundamentally, the problem that needs to get solved is your current keys are insecure in passkey date, and they need to be made secure. And there needs to be a bridge, and there needs to be somewhere you're going. So that's like kind of the two pieces that need to get solved. Right now, everyone's just sitting on an island. That's, a tidal wave is coming. This is a bad analogy, but I'll just go with it. Right now, we need to build a bridge, and we need to go to some other island where the tidal wave is not going to hit. Right. And so I think certainly wallet infrastructure has to get solved, and we're going to contribute to solving that. But that's not all, right? There also has to be this migration pathway, and I think that's important.
Yeah, that makes sense, and that's more tangible. I have a very intangible question here, but I'm just my own curiosity. I can't help myself. How intertwined is AI and like, how much is AI accelerating the timeline to, and I get it, timelines are tough when it comes to this kind of thing, but do you think AI is going to push us closer and closer to the sun when it comes to reaching Q day?
Look, so first off, caveat, I'm not an expert on AI. That said, I use these. I think these days everyone uses these tools, and we've all seen how they've gotten better and better and better and more capable. I think it's very likely we'll see these tools integrated into specific sections of, like, the quantum computing stack. For example, like, a quantum computer is very error prone typically, so you have to do this error correction, which is quite computationally intensive, but that uses classical GPUs. There's a world in which you have an AI assisted error correction stack that makes that better and more efficient, and then makes your quantum computers work better. So I don't think you can rule out at all that AI will accelerate this, right? This is kind of one of the, I would say it's not a definitive yes or no, but it just adds to the uncertainty. Yeah. And uncertainty is our enemy here. This is why, like, we should do everything we can in our power to control and secure ourselves now, because we don't know the answer to the question you posed, and we don't know the answer to many others that relate to the quantum computing timeline.
Is the approach almost like, we're going to hire the most talented engineers, we're going to try our best to, sort of to create what we think is quantum resistance? But I've heard this when it comes to AI too, and I'm not an expert, but I've heard this philosophy where, the best way to protect against the threats of AI is to develop AGI, or, super intelligence, so that then we know it and we understand it, and therefore can protect against it. When you're talking to your internal engineering team, are you like, hey guys, let's try our best to think about quantum, build quantum, so that then we can protect against it? Or, like, what is the design philosophy when it comes to your engineering team?
Yeah, I mean, look, don't get me wrong. I think it would be super cool to build a quantum computer that was able to do all this stuff. I think, practically speaking, the discipline of cryptographic engineers and the discipline of like quantum physicists. That, by the way, we have a quantum physicist, a gentleman named Dolev Blovstein, who's authored a lot of the leading work in quantum computing from Harvard. Now he's now at Caltech. He's a fantastic guy, and this is where we get kind of our up-to-date information on what should we be paying attention to. Anyway, he's our advisor. But the point being is like our engineering team is focusing on securing, right? Securing and attacking in this context are very different disciplines. But I do think, as when you're modeling these systems and you have to think about their security, you do have to think about potentially the attacker, right? Now, the attack vector is well known, and so I don't think you need a lot of creativity there. But I think there's a question of, for example, which wallets would get targeted first, right? Would it be Satoshi's Bitcoin? You might think, yeah, that's the obvious thing to do. But then again, if Satoshi's Bitcoin moves, it's pretty obvious what happened. The quantum computer showed up. So maybe you're not going to go for Satoshi's Bitcoin. So what would you go for? Maybe you go for a bridge wallet, and it would look like a hack. No one would really know, right? And so I think there's kind of a wargaming aspect. But I would say in general, for the talent that we aim to develop, I mean, look, it's fundamentally security engineers, it's cryptographic engineers with this specific expertise. And part of, again, like our fundraising and building the team is like, look, there's not, these people don't grow on trees. Like post-quantum cryptography has never been relevant, right? Because it's, quantum computers don't exist yet. So there's like a relatively limited pool of talent, but we need to get those people. We need to get them working on this, because I believe, look, there's a lot of places in the world where post-quantum cryptography applies, banks, elsewhere. Yeah. But quite frankly, the value at risk nowhere is bigger than blockchains. And maybe I'll just, if I could take a second to address this, because I get this question a lot. Sometimes people are like, oh, Alex, banks are going to be, the world is going to end if a quantum computer shows up. So why would anyone care about Bitcoin? And I think what I would remind people is like, look, if you log into a bank, there's like a login flow, and you're using some digital signatures there, sure. But like, if I somehow get into your bank account, Robbie, and I like try and wire all the money out, most likely the bank is going to call you or do something else. Like, point being is like, banks have a lot of layers of control. Blockchain and Bitcoin, decentralized by definition, does not have that, because if it had that, it wouldn't really be decentralized, right? So you have to control everything. And that is what makes it like the only thing that's preventing Satoshi's coins or Coinbase's coins from moving is one digital signature, potentially a few if it's a multi-sig. The point being is that's the only thing that stands for me. So that's why, and the value is so obvious. So I think for that reason, I think this is really the place where it matters most in the short term. And that's where we focus all of our efforts. And we also believe fundamentally that, like I said, we're all pretty bullish on crypto and blockchain rails. We think these are going to ultimately become the foundation of finance, but only if they're made quantum secure.
And this is another selling point to the banks to say, hey, this is ready for those assets. There's a migration, and I think a lot of assets are still off chain, and they're limited. They're not ready to come on chain because there aren't proper controls in place. And we're seeing this trend. First it was nothing. Then it was this idea of like, okay, we're going to build these permission blockchains, these consortium chains. They're going to almost be blockchains on training wheels. Those kind of fizzled out. Now we're seeing, a rise of more and more chains. Ultimately, we do believe that there's going to be this asset migration happening on chain. And it's ultimately, the goal is that it does happen on open public blockchains that are composable with the rest of finance, but they have to have the proper controls in place. Otherwise, the asset issuers and the custodians are never going to feel comfortable deploying those assets on chain.
Exactly. And by the way, like, this as crypto has become more accepted, which I think is something we should all celebrate. Over the last 10 years, crypto's gone from being like this weird niche thing to it's huge. I mean, this is like integrated with finance, right? But with that comes regulation, right? And you have currently in the U.S. Congress the like market structure bill. In that bill currently, in the current last text I saw, there is a section on post-quantum cryptography encouraging protocols to adopt this now. And pretty soon that suggestion is going to turn into a requirement, right? And so I think, because banks are like, there's already a government mandate for banks to migrate by 2030, right? So I think this is like, whether or not a quantum computer becomes real by then actually sort of matters less than what you have to do to comply to be part of this broader system. So I think that's another fundamental tailwind for our business.
Yeah, great call out. We've talked a lot about market structure over the last couple of days. We're going to be talking a lot more about it over the coming days and weeks. Alex, man, congrats on the raise. Thank you so much for coming on, and best of luck as we draw closer and closer to Q Day.
Yeah, I really appreciate it. I hope this wasn't the last time we speak, and thanks a lot for having me on today, and thanks to your audience for listening.
Yeah, love to have you on again soon. Cheers.
Take care.
See you next time. All right, guys. Well, that wraps us up. It was a good show. Wow, we went all across the docket today. Andy unfortunately had some tech issues. The Wi-Fi out there in Hawaii isn't too great today. It's a little stormy. Also, there was a weird cellular outage across the entire world. So Andy dropped, but we had a full show. Bartik came on from L2Beat. We talked RWAs. We heard first and foremost, they're going to be getting into the RWA scene. He said that he's open to coming back with Adam from RWA.xyz to talk about how RWA data and tokenization data should be displayed. Ultimately, these are the definitions and the standards that get adopted into the mainstream. I had a call, and RWA is working with the likes of the S&P, some of the greatest, the best and brightest when it comes to the legacy financial markets and generally how this data is transcribed and proliferated into the rest of the economy. And obviously L2Beat, you guys all know how important they've been to the crypto and blockchain landscape and how everyone uses them as the barometer for something, a rollup that is secure or not, and how it progresses through the stages of decentralization. So shout out to Bartik, some great perspective on the emerging RWA landscape. Followed that up with our guy from Figure, who just announced, open and tokenized equities are going to be coming to Providence. That is going to be standing side by side with Figure HELOC, which, I mean, guys, everyone, I think Figure HELOC is maybe the most under the radar, misunderstood coin on the market. If you look at it, I think it's number 12 on CoinMarketCap. So it's probably going to make a break into the top 10. And they've originated $20 billion of loans. And so that is just continuing to pile up and pile up. And so that did extremely well over the last few months. And now they're standing up a tokenized equities business. They're going to be putting more equities on chain. And they at Figure are doing something that we heard Carlos Domingo from Securitize also talk about, which is tokenizing these shares directly. These are not representations of shares that say at the DTCC and are tokenized representations of those shares. Nope. They are tokenizing the actual shares. So I think him and Bartek actually agree that that is the right way to do things. They also agree with Carlos Domingo from Securitize, who will be on the show again sometime soon. And last but certainly not least, you guys got the update on Quantum from our guy Alex at Project 11. Congrats to him for raising $20 million very, very recently. So another phenomenal show. We will see you the same time tomorrow, hopefully with some better Wi-Fi. That's it. Keep the pumps going, guys. Pump it, Loomdart, Moondat, and hold on to your coins because the institutions are coming. Signing off. Cheers.